What's going on, guys? It's Investing Hustler here, and I have Aaron from Departures Capital with me. How's it going, Aaron?
Going great. How are you?
I'm doing good. So today we're doing a top three, and we're actually doing this a little different this time. So I'm doing my top three right now. Aaron just did his top three, but if you want to check out Aaron's top three, you're gonna have to visit his channel and check it out. Make sure you check it out after this video, of course, and then the same thing, vice versa. He's gonna have his top three on his channel, and you guys could come check it out here. So maybe you guys join me from Aaron's channel. So before we get started, don't forget to leave us a thumbs up. Let me know what you guys think about my top three, Aaron's top three, or what you think the top three tech stocks are. We're kind of going for companies that have been beat up in the past few months. We've had a kind of a bearish market. Some thought of it was a market crash. In December, we had like the worst of the worst, and we've slightly been recovering, but some companies continue to get beat up. So we're going to look at these top three companies. And the first company I want to talk about is Sony. So as you guys can see right now, Sony has been beat up all the way down to $44.29. Sony is close to the 52-week low right now. The one thing I do like about Sony is that they have a 7.7 PE ratio, which I would consider undervalued. They do have a decent 0.6% dividend yield. Unfortunately, if you do look at their technical analysis, it is a sell and a strong sell. Let's look at their 1 minute real quick. It is a buy and a strong buy. There is some good news with Sony. Recently, Sony splurges on a blockbuster share buyback. We're just going to touch up on this article real quick. I think it is a pretty short article, so there's not much we could talk about. So technology giant Sony has announced its first ever buyback of shares worth more than $900 million. But as Reuters breaking views, Robin Mack explains it's likely just the first step on a journey to a higher valuation. The fact that a company is that confident to purchase $900 million worth of their shares just gives me that much more confidence purchasing this company, because clearly they think they're undervalued. So why else would they be buying back $900 million worth of shares? What do you think about this news? What do you think about this company, Aaron?
Yeah, I mean, Sony, I feel like Sony's always going to be around. And with the recent pullback, it just presents an opportunity to start to take a look at such an industry giant. I mean,
Exactly.
let's face it, Sony's into everything. And I love PS4. They make PS4. And I really think that, the launch of their next-gen console is going to be very successful.
Exactly. We haven't even mentioned the PS5, which it probably will be coming out in the next 2 years.
Yeah, exactly. So I'm super pumped for that. I think that, these companies, we look at, okay, so electronics, right? So you got TVs, you've got all the speakers and all those other little things. But I think the next gen console will be a massive, avenue for way more profits to come in, as like the current gen consoles are starting to age.
Yeah.
And, Sony's coming out with VR, and that's only going to get better. And the next gen console, and I feel like PlayStation is just a cash cow for Sony. I would love to actually dive into their financials and see what percentage of their earnings comes from PlayStation, because I wouldn't be surprised if it's a huge amount.
Are you going to do that or no?
No, not right now. I mean,
Okay.
we're just looking at Sony based on the fact that, they're beat up and they're on sale right now, and they're definitely one to take a look at. But
Yeah, another thing I do want to mention is even when the PS5 comes out, that means that the PS4 will drop in prices, and that means that your PS4 sales will also go up. There's a lot of people probably right now that don't own PS4s because it's too expensive for them, and I used to be someone who only owned a PS3, and I wasn't going to buy a PS4 because it was too expensive at the time. And once the PS4 prices drop, everyone's going to own a PS4. And then there's so many Sony diehard fans, because you always hear those wars of Sony versus Xbox, that they just buy the newest gen the moment it comes out. So this is a company that you could just hold on to like for the rest of your life, especially at this point since it's so cheap. And if it continues to drop, it will just continue to be a better valued company, especially with a 7.76 PE ratio. It's just it's kind of a no-brainer for me, but who knows? This company can decline some more, but they did buy back $900 million worth of shares, and they did have a nice little spike in that day. But I also do want to mention that all these companies we're talking about is just strictly for entertainment and educational purposes. And we're only here to give you our opinions on these companies. I don't expect or I don't want anyone to buy a company simply because we're talking about it. You're
Yeah.
encouraged to do your own research, encouraged to do your own due diligence on each and every one of these companies. Anything else you want to add to Sony or move on to number two?
No, I'm giving Sony a thumbs up. I mean, any company that owns PlayStation, that's pretty much a no-brainer for me. But I'm a PlayStation fanboy, so next talk.
Exactly, same here. So the next stop, this one's Take-Two Interactive Software. So a lot of people know Take-Two. They know Take-Two for GTA 5, for Red Dead Redemption. And GTA 5 is like one of the most successful, not just GTA 5 alone, but Grand Theft Auto is one of the most successful games ever.
Yeah.
So there is some news. Before we do that, let's just look at their financials real quick. So right now, they are a little overvalued with 30p ratio. And if you look at their 52-week range, they are near the bottom. Obviously, there was a nicer buying opportunity. They did go as low as $91.49. And right now,
Interesting.
they're sitting at, what is it, $97.14.
Something
So
like that,
it wasn't that much more of a buying opportunity, but that might have been the low, and they could be getting ready for a nice run. But nothing is ever guaranteed. Market cap 10.9 billion, probably will be in the 11 billion soon. 113 million shares outstanding. That's actually really good. The fact that they have such a small amount of shares outstanding. Price to revenue is a 4.2. Price to sales 6.1, which is pretty decent. Technical analysis is a neutral, a sell, and a strong sell. If you look at the 1 minute, it's a buy, a strong buy, and a strong buy. So in the 1 minute, it's a strong buy. So now I'm going to move on to an article. This one is a Motley Fool article. Obviously, some people dislike Motley Fool. Titled, Like Video Game Stocks, Two Hot Buys for February. So two of them is, one of them is Activision Blizzard, which was one of your, actually, maybe I shouldn't mention, or
it doesn't matter. We
okay,
were talking.
spoiler alert, it's Activision Blizzard. One of them is one of those picks are Aaron's, and Take-Two Interactive is my pick. And we did not pick these companies because of this article. We actually picked these companies before reading this article, and then we
Yeah.
had like a nice laugh. Like, what a coincidence that both our picks, Motley Fool made an article on both our picks. Okay, last year the global video game market generated roughly 138 billion in revenue, up from roughly $76.5 billion in 2013. Research firm Newzo estimates that the industry gross revenue will hit 180 billion in 2021. So that's an encouraging backdrop, and it suggests that leaders in the video game space have opportunities to drive and capture industry growth and deliver strong performance for shareholders. So take this post-earnings opportunity to buy Take-Two. To use some video game language, publishers Take-Two Interactive have leveled up a lot over the last 9 years, jumping from small cap to mid cap to large cap in less than a decade. A rapid run-up like that can be because of skepticism or caution, but it looks like Take-Two will continue to deliver wins for long-term shareholders. And a recent post-earnings stock slide presents a worthwhile entry point. So yes, Take-Two did get beat up recently, and it could be a perfect entry point for all you long-term investors looking to get into the video game industry. So Take-Two stock hit a lifetime high in September thanks to a fantastic ongoing performance of GTA 5 and excitement surrounding the release of Red Dead Redemption 2. However, the stock lost ground along with other video game stocks and the broader market as 2018 progressed, and it posted steep declines this month following the publication of the company's third quarter results. So I'm not going to read this full article. So if you guys want to look it up or do more research on this company, which I do encourage you to do, just look up this title, Like Video Game Stocks, Two Hot Buys for February. You want to add something to Take-Two? What do you think about this company or the video game industry in general?
No, I love the video game industry. I think it's only going to grow, mature, and get better with new technology, VR, and all that kind of stuff. And GTA, from the first time I ever played it, GTA 3 on the PS4, I love the game, and I think every game forward, as long as they stay consistent and keep improving on it, it's going to be a hit. I think GTA is one of those series that always has the potential just to keep growing and getting better. It's just any video game that can basically recreate life and allow people to do endless things. Just that's what we want to do as humans. We just want to. Sometimes you just want to go into the game and blow up a bunch of stuff, steal a car. Who knows? Like, I just mean like having the freedom to do whatever you want in a virtual world. I think that's where GTA is going, and it's going to continue to be a series that's always a hit. So yeah, Take
Yeah.
Two. They've got 2 thumbs up from me.
Exactly. I think like right now under $100, this company, I like it. I'm tempted to start a position in them. These aren't companies like Aurora Cannabis where you go in there and you can get like 20-30% gains in like a couple months. I feel
Yeah,
like it's a nice long-term investment. Like when GTA 6 comes out, for sure there's probably going to be a Red Dead Redemption 3. This company is only going to grow and they're probably going to come up with even bigger hits. And it's not only those 2 games. They own NBA 2K, which is another big hit. There's so many diehard fans out there with 2K.
oh yeah,
Microtransactions. They're killing it with microtransactions. And it's just, I think the possibilities are unlimited with this company. But once again, do your own homework, do your own due diligence, and never invest in a company just because we're talking about it.
exactly.
Okay, so now on to number 3, which is Nvidia. So this is another company that's gotten beat up. If you can look at these charts, you can see that they went from a high of $292 all the way down to 124, and we're currently sitting at 148. So it does look like this company did reach its bottom. It might be getting ready to push forward, and the main reason why this company has been beat up so much is mainly because of cryptocurrency. Here's an article from Motley Fool, 3 things to watch in the stock market this week. And one of those companies is Nvidia, moving in the trading week ahead. So let's just touch up on Nvidia real quick. So Nvidia's outlook. Okay, many of the key questions about Nvidia's fourth quarter were answered in the painful updated financial guidance that the chip maker issued in late January, which contributed to a 28% stock price decline over the past 3 months. In that release, CEO Jensen Huang and his team slashed their profitability forecast because of the lower than expected sales in both the gaming and data centers businesses. It was an extraordinary, unusually turbulent, and disappointing quarter, Huang said to me. On Thursday, investors will find out important details about the nature of those demand struggles, which management said were driven by economic issues in China and price sensitivity for its high-end gaming hardware. We'll soon learn how management plans to respond to these issues. The bigger shareholder concerns center on Nvidia's prospects for the coming year. Its also outlook has declined in each of the past 2 quarters. After all, if that trend continues, then the slump might better be described as persistent rather than extraordinary or unusual. So one of the main reasons why Nvidia is getting beat up is due to cryptocurrency's fall. A lot of these companies were purchasing NVIDIA's, I think, graphic cards or their chips pretty much to mine cryptos. And as you guys know, in the past 2 years, cryptocurrency has been crashing. Bitcoin has went from a high of 19,000 all the way down to $3,000 American. So obviously the demand for all these graphic cards have declined. On top of that, their graphic cards are a little overvalued. For example, I think they sell some graphic cards for $1,300 to $2,000. So your average gamer who has a gamer PC is not going to spend that much money on a graphic card or on a chip. So maybe Nvidia is going to have to restructure their company, maybe lower their prices a bit, make a few minor adjustments. In the short term, I think this company might get a little more beat up. Their PE ratio is 20, so I wouldn't be surprised to see that go down to 15 to 10 if this company keeps declining, maybe even go as low as 120, 100. But if it does go down to 120, 100, I definitely will consider purchasing this company. It's definitely a tough call. We don't know if this is the beginning of worse things to come, or we don't know if this is as low as it can go. So what do you think about Nvidia, Aaron?
Once again, we also got China in the equation, right? So we definitely need to see some trade war progress.
Yeah, that's another
I think
one.
that's eventually gonna hopefully come together. We'll see if they can fix that. But I mean, yeah. So what they make is it's obviously important for the world moving forward too. AI, VR, all that graphics and then that kind of stuff. Like what the company makes is very useful, and I don't see the industry dying. But Nvidia definitely has to make some big changes, restructure, because they were making tons of money off of crypto, selling the graphics cards. Everybody was buying them out. Crypto miners left, right, and center. They couldn't make the GPUs fast enough. But now it's the total opposite, and they're like, oh crap, well, crypto's gone. That huge source of revenues, it popped and then it sold off. So
Yeah.
it's back to the markets that always have been there, which are computers, video games, cell phones, all that kind of stuff. So, and that's also has a lot to do with the global economy. So,
Yeah, I think thanks to cryptocurrency, expectations got real high for
oh
Nvidia.
yeah,
They were probably doing record number sales, record
yep.
number and everything, and that bubble popped, and so did Nvidia. So it's a tough call. This company could recover, but it's going to be interesting to see how this company plays out. But then once again, Nvidia is more than just a graphic card company. They do work in AI, and they do more work beyond that. So it's not a one-trick pony. So I do see Nvidia bouncing back from this in the long term.
Yeah, I think it's one of those tech stocks that's always going to be there. But for now, obviously, there's a reason that the share price is suppressed, and now it's going to be time for Nvidia to prove themselves after crypto.
Exactly. So this is going to be make or break for Nvidia, but I think they're one of the leading graphic card makers. So I think they'll definitely bounce back from that. But yeah, that's it for my top three. Aaron also did a top three. Like I said, if you guys want to check it out, I'm gonna leave the link to his video in the description below, so you guys could check out Aaron's top three. I'm gonna be there. He's gonna be there. And also, if you guys enjoyed this video, don't forget to leave me a thumbs up. Don't forget to hit that notification bell, smash that subscribe button, and we'll see you guys next time. Bye-bye. I think we're good.